Okay, hello everyone. This is Greg Lewis coming at you from my basement, aka the temporary Metastock studio. I think I'm live. Everything seems to be okay. We'll be starting today's weekly market recap here in about 9 minutes and 20 seconds, as you can see by the counter. And as you're coming in, make sure to say hello and where you're coming in from. And I can see some people already coming in. Make sure you say hello and where you're coming from. So far as coming to you from our basement, that situation still hasn't changed here in our local government. We can go back to the office, but our office has chosen not to do for a few weeks anyway. And I would like to report that the Metastock office continues to be healthy and no one's affected personally or specifically by the pandemic as far as getting sick. And I should probably also mention today's presenter, I should say guest, is having a brain freeze, I'm sorry, Darryl Nagel. And he's coming from Australia, where right now it's probably 6 or 7 in the morning, so we really appreciate him waking up early to help us out today. Also, the host will be Hunter Smith, and they'll both be on here in about 8 minutes and 14 seconds. Hello, Dan666 Mega. Thumbs up to you too. Thanks so much for saying hi. Hey, before we get started, there's a few things I wanted to mention. One, of course, we are Metastock. This weekly market recap, is sponsored by Metastock, and we're very pleased to do so. To that degree, I'd like to tell you about a few things going on with Metastock. And flip over to that. Okay. This is the Metastock 2020 Spring event. I tell you it because it's a very famous annual event. I should say very popular annual event for Metastock. It was supposed to end at the end of last month, but we've run it through June, and it will end at the end of June. And it's got some great deals. What computer am I doing here? As you can see here, you can get great deals on Metastock if you're upgrading. If you don't have Metastock, these are some great purchase prices available to you. Hello, A. Hansen from Bristol, UK. Hello, Yahya Al-Mari from Dubai. Thanks so much for checking in, guys. As part of this current campaign, which is over in, 7 days, you can get select add-ons for $100 off. Those are our one-off add-ons, and you can get subscription add-ons, several of them, for the first month free. So these are great deals, and you should probably check this out. The website is metastock.com/ and I'll highlight it right here, ADMM420. Metastock.com/ADMM420. I encourage you to visit this page. Also, this Saturday, tomorrow, we are going to have our monthly online trader summit. You've probably heard of this. I know a lot of you have already registered for it. It's absolutely free, and it's tomorrow morning, local time at 8 a.m., New York time 10 a.m., and it includes speakers such as David Kino. He'll be talking about impulse trading. Wendy Kirkland will be talking about proprietary indicators that pinpoint market trades. Vince Vora, ever popular Vince Vora, how to grow your account in a coronavirus storm. Barry Burns, timing your trades for accurate entries and exits. Our very own Jeff Gibby will be discussing hidden gems in Metastock. Hima Reddy will discuss Not Your Mama's Momentum, how to profit in any market at any time frame. That should be interesting. And finally, Steve Primo will talk about a simple to follow process for consistency. I'm probably making you guys seasick. I'm sorry, I'm not very good at multitasking. Oscar Carboni, who is exceptionally popular and very interesting to hear if you've never heard him give a presentation, will be talking about technical analysis is king. What else did I want to talk to you about? Oh, yes, one more thing. In addition to our Trader Summit, every couple months we have the APAC Trader Summit, which specializes in APAC, Asian Pacific corporations. And today's speaker has been part of that in the past. I'm not sure if he's going to be a part of it in the future, but that is coming up in August. So if you want to, the details have yet to be announced, but if you want to join us on that day, It is August 15th, and you can go to our website, which is metastock.com/APAC, APAC-summit, and you can register there, and you'll receive information as we get it. Although currently the speakers have not yet been announced. Let's see how much time we have to go. Okay, we have about 4 minutes. I do see that Darryl has arrived, and also Hunter, so they should be raring to go here in about 4 minutes. And I see no one else saying hello. Now I see a lot of you are here, but you're being sort of shy, so go ahead, say hello, tell us where you're from, and I'm going to go ahead and mute myself for a few minutes until we're ready to go. Oh, no, there is one more thing I wanted to mention. Next week, I am doing a webinar on Thursday about Bollinger Bands. It's going to be Bollinger Bands 101. It's just a very basic overview of what the Bollinger Bands are and how you can use Metastock to scan for them. And if you want to attend that, just go to metastock.com and go to the webinar section. As well as, I believe it's next Wednesday, Vince Vora, who will be talking tomorrow as well, is doing his own webinar on a subject that I cannot recall right now, but just go to metastock.com/webinars and you can go ahead and register for those. So thank you for patience. We'll be starting in about 3 minutes. If you have any questions, by the way, sorry, I keep on forgetting to say things that I've got to say. If you have questions along the way, today's broadcast will only be on YouTube, so you can ask questions in the YouTube chat. Hunter and myself will both be monitoring YouTube chat. Darryl may or may not be able to see it, but we'll certainly pass it on to him. This is not being broadcast as often as on GoToWebinar on Fridays for our market recap. We only broadcast on YouTube. This is the only place you can see it. And yes, we are recording it, so if you want to go back and review that, you just come back here and you can play it over, and you're good to go. Okay, 2 minutes, 30 seconds. I'll go ahead and mute myself and let you guys listen to some jazzy music and check in on Darryl and Hunter to make sure they're ready to go.
Hello, everyone. My name is Hunter Smith with Metastock. It is a beautiful day. I assume I'm looking out of the home office window and it looks nice and sunshiny, but I'm excited to be in here with you to cover some of the things that have happened this week, both domestically and internationally with our market roundup. Now, before we get too far into our special guest or to any analysis, I wanted to cover our disclaimer. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using these specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of our software, any trading strategies, or information provided in connection with the company. Now, on to our special guest today, back just in time, Mr. Darryl Nagel. How are you today?
I'm awesome. Thank you, Hunter, very much indeed. It's 6:30 a.m. On Saturday morning here, but otherwise all good.
Far too early for me to be in a suit and tie, so you're a braver man than I. Now, Darryl, you started investing into the financial markets in 1986. You were a corporate lawyer for Australia Bank in 2003. Yet you've been investing into markets for quite some time now. Primarily, what do you trade right now? Do you find yourself dealing mainly with equities or options, futures? What do you trade now?
Yeah, it's I've started off with options, and I'm still trading options today, Hunter. And with the equities, I use CFDs as leverage.
Wonderful. This market, it's been a bit of a roller coaster ride. How do you feel overall about this market right now?
Well, you've always got to be aware as a trader, I think, as your bias. And my bias is bearish at the moment. I try to not allow that to colour my perception, but I'm human, so it tends to do that. I guess for me, one of the things that I believe is important is to just look at price action, allow the market to tell us what is happening. So I believe the market is always talking to us. I don't hear voices. I'll say that quickly. But I try not to predict what the market's doing or even forecast it, and allow the usual, whether it's indicators or whatever methodology people use, to particularly now, because I think the certainty is the uncertainty.
That is true. I couldn't put it better myself. It is, as traders, we have so many variables in the market. There's so many different things that people can look at, so much information out there. It's ridiculous. So the only certain thing is that we're always going to have a ton of variables. So it's lining up the constants in our trading that I think is very important. And it allows us to just hold on to the reins during times like this. I have a chart of Dow up right now. The indicators that I have on, very, very simple. I have 3 moving averages, 8-period simple, 8-period exponential. The blue line is a 50-period simple, and then a 200-period moving average. Primarily in my trading, I use a lot of the 200-period moving average as kind of a guideline. Currently, the Dow's having a lot of issues with the 200-period moving average. We're above it for a little bit today. We dove back down. There's been a lot of turmoil in the U.S., and I think financially that's actually starting to catch up to us. Our big drop here was primarily based off fear, and if you watch our market recaps previous, typically I always say that this first major dip that was in mid-February, the crash that we're recovering from, it was fear-based. But now we're actually starting to see some of the longer term financial ramifications of people being out of work and in industries, really suffering. How do you feel about the Dow right now, Darryl?
Yeah, it's I guess there are 2 camps, isn't there? There is this concept of the V shape, and there's been good reason up until the last few days that could be the case. And I think that's evidenced by that 200 moving average where it popped its head above it. at the moment, it's finely balanced, isn't it? Today there were a few technical issues. There was the quadruple witching hour, and the market seems to be really moving more than ever about news that comes out. It's amazing. But when you look at, I was just looking at the volume there. It's interesting. Today had quite a spike up in volume because before today, though, you notice the last few days the volume has been going down. So there's been a view that the institutions aren't buying into this rally. It's more the retail market. But basically, you can see if we. Are you easily able to put a Fibonacci retracement on that chart?
Sure.
Beautiful.
From where to where?
Just from the top, our top back in February to the bottom in March.
Oops.
Excellent. So what's it to me? Whilst most people who look at Fibonacci retracements look at 61.8, I often look at 50%. I know people don't think that's a fib ratio, but it is actually. When you look at the actual numbers in Fibonacci, it's 1, 1, 2, 3, 5, 8, 13, 21, 34. So the actual ratios are based on that Fibonacci sequence, and 50% is a relevant number. And you can see what happened at the 50%. The market, to me, it's like a support and resistance. And then when it got up to, look where at the 61.8. Now, people, excuse me, I mean, you can put a lot of lines up there, but to me, what is interesting is 50% and 61.8 seems to be areas where you can actually take trades, I believe, either way. And just at a high level, at the moment, I'm quite, when I say bullish, about being bearish. In other words, I'm more than happy to, I think we can take money in this market by being skillful and prudent, of course, and everyone has to be skillful in this and have the right financial advice in trading. But given that, I believe this volatility, I mean, when you look at the volatility from February to March, you can see the volatility very clearly. It's been patchy from March to now, but look at, was it 1, 2, 3, 4, 5, 6 days back? That was a big range. And so that's sort of a signal that, we are in uncertain times. I think one has to be nimble. It's almost like if you're an intraday trader, this can be excellent. But in any event, if people have got their stop losses or trailing stops, that's the thing that really protects us, because there's just so much happening in the markets, around the world that we can talk about today that's really affecting the markets.
Yeah, and I think I'll pull back realistically to that 50% Fibonacci line. I think that's pretty realistic. I think next week we might see that. There's a lot of price action at that level. There's a lot of strength and a lot of cause for the Dow to be hanging around that level.
Yes.
So I think we might be in for a little bit of a short-term bearish market. If we look at the S&P, it's going to ring pretty much the exact same. But I think that on this end, after the stimulus, after people kind of got a little bit inflated that everything is going back to normal. We have a bunch of states right now that are having highs. In fact, today in our state, in Utah, we just had the highest number of cases reported since this whole thing started. So
wow.
Yeah, we're not really clear of everything yet. Plus, I think that Trump losing a little bit of ground has some market makers a little bit worried.
Yes.
But this is the international market recap. So let's go ahead and take a screen at what you have. Let's take a shot at take a look at what you have here. Let me change the screen over to you. Let's see. Should have a prompt there on your screen that says, "Oh, my screen." Perfect.
Okay, I'll just.
I see your PowerPoint. Perfect.
Excellent. So can you see it's the ASX 200 monthly?
Correct. Yes.
Yeah. Well, just at a high level down here, we've been pretty good with the COVID-19. We had a very strong message from our state and federal governments about social distancing, and basically we've all done that. So we're pretty compliant down here.
Must be nice.
So yeah, it was great actually driving around because there were hardly any cars on the road. And Sydney, where I live, is just unbelievable with the traffic. So there's been a positive. But what we're experiencing down here, just at a high level, is that we've got high unemployment. It's up to 7%. It was down to 3%. Here, as around all of the Western world, I think the reserve banks and your Fed are doing the right thing. So the message has been, we, the Reserve Bank, the Fed, will do whatever it takes to support this market. So that's a big positive. I think that's one of the things that people are looking at, and I think it's excellent. However, there's only so much that reserve banks can do, and Jerome Powell has indicated that. And just like down here, he has indicated that a lot is going to depend upon our ability to cope with social distancing going forward. So here we've had a problem. You go into a shopping mall and some of the stores have not opened up again. So retailing down here has been affected. And of course, a lot of businesses now have got so used to going online. I've got a legal background, and now law firms are looking at, well, hey, do we really need everybody to come into an office? I don't practice now, but I used to have my own little office, and then they had hot desks, and now people can work from home, and so that's going forward. That's going to perhaps have some adverse effect. Now down here we've had two stimuluses. It's called JobKeeper and Job Seeker. So that's where the government is really giving us money to cope with the people who aren't working. We've got some real issues here. I think they're replicated all around the world, particularly with China. China has got very upset with us. We're very dependent on China. That's one of the advantages of where we are in the world. Australia, we're in Asia, and they've got upset with us because we said we wanted to be participating in the inquiry into the origins of the COVID-19. So they're saying, rightio, we've got 80% tariffs on our barley. They've told their population not to come here because we're anti-Asian, which we're not. They've told university students not to come here. So we're going to be adversely affected by migrants not coming here because we depend upon a lot of migrants. We're only 26 million people here and a few sheep and kangaroos. So we're really dependent upon us growing our population. We've got a land size virtually the same as the USA with only 26 million people. So we going forward, our universities are worried. And so that's reflected in our ASX 200, whereby we haven't really, we've only just got back to where we were with the global financial crisis, whereas in the States, of course, you've gone way ahead. So we've been a lagger, and so in Asia, we've got protests here, not to the same extent that you have in America, but we've got protests, we've got trade wars, we've got unemployment, we've got against that we've got that stimulus that's coming from the government, but of course that can't last forever. So at some stage, we've got to try and get back to normal. The big uncertainty, really, Hunter, is we've never been in these times before. Even with the Spanish flu, I wasn't around then, but in the 1918s, I don't think businesses closed. I don't, even during the Great Depression, we didn't have exactly what we've got now. This is unique. And so because we're in uncertain times, but I really think that with the volatility, depending upon how you trade, and this is why I'm glad now you've got option scope in Metastock, because I like trading options, and there are some quite good strategies there. So these are good times, I think, for traders.
Yeah, no, I agree. It's there's a lot of opportunity here. And this is something that's kind of echoed. I've had many speakers on since all of this has started. We've done market recap every week. I've done one every other week, and consistency through all the speakers is, hey, this is a great time. We might still be a little bit bearish, but there's plenty of volatility. If you're a bull, if you take long trades primarily, there's still a lot of room to grow. You're getting things deeply discounted, but you have to be very, very smart and understand that this is not, I'm going to take every dollar I have and, throw it into the market right now. This is a time to be a little bit wary, because the main difference between the other crashes that we've had in the past is this one was based off emotion initially. So it's not really, there's not really a fear indicator. There's a fear index, the VIX, but there's not really a fear indicator, So very, very interesting times. I understand Australia is a little bit behind as far as the recovery. I'm not so sure that that's a bad thing, though. I think that what do you think about Australia maybe being a little bit more cautious as far as the actual market is concerned? So your numbers are a little bit more true than what the Dow has been doing. Yeah,
we're only got two sectors, you could say. We don't have manufacturing. We don't even make cars anymore. So we're just really miners and bankers. So it's the banking industry and the mining. They're our two sectors. And so because we don't have a manufacturing sector, and of course the services sector is large, but we're really a very small market. I think that's the case. There's not the liquidity there. We've had market makers who have left our stock exchange. So as a result, I think more and more people are looking to trade overseas. There's no doubt about that. So I think that has an effect. I haven't looked at the Canadian market, but I think we're very similar to Canada. So you can compare us with them.
Yeah, and well, as a side note, I'm very sad that you guys don't make cars anymore, because I was a big fan of Holden. But if you're miners and bankers, where do you sit on banks right now? Because obviously the primary way that a bank makes money, lending money and getting interest on that money, and if the governments are keeping interest rates low right now because no one can afford high interest rates, what do you feel the impact on banking industry has been and will be?
Yeah, well, we've gone through what we call a royal commission. That's a very sort of Englishy thing, where an independent body comes in, and all of the major banks have been caught up in practices that really were not okay. And so that's badly affected our banking industry and our confidence in the banks. But also here, there is a challenge for banks, we have very, very high housing costs. You can't get a house under $1 million in Sydney virtually anywhere. And when you look at our the mortgage rates, the borrowing is very, very high. So we're at a really concern that these are the following things that could occur. Number one, if there's continuous unemployment, that's obviously going to affect adversely people's ability to be able to repay their loans. Also, because of COVID, we didn't have auctions and whatever. They're slowly coming back, but there's a shortage of listings. And so the market potentially could be adversely affected, particularly off the plan. There's a lot of apartments that are vacant that people aren't buying at the moment. And a lot of those were bought by the Chinese, by the way. So that's the other effect of our property market. So our property market could be in for a little bit of a challenge, but we do not have non-recourse loans here. So we have a covenant a personal covenant to repay the loan. So we can't just go into the bank and say, look, here are the keys to my house and I'll walk away. We still have a debt. So that is a counteracting factor that people are very reticent to give up their homes. We typically, most Australians want to own their home. Like we've got 70% ownership, 30% rental, whereas often overseas it's the other way around. But young people, of course, can't afford to buy a house for $1 million. Even an apartment in Sydney is $1 million. It's
so expensive.
It's very, very high. Yeah, very, very expensive. I think it's a bit like San Francisco. I'm not sure about all the real estate prices there, but it's a little bit like that.
Yeah, I think you're at about $1 million for a shower. It may or may not come with a toilet.
Yeah,
yeah, it's pretty close. Pretty close, I would say. So ASX, tell me a little bit about what's on the screen right now. You've drawn a couple of channels, looks like.
Yeah, well, so you can see where the 6850 mark is. I'll just get rid of something here on my screen. I'll just move it. It's that panel that comes up. So when you can see back in 2007, we've only just got back up there now. So we actually popped our head above it. And so people were saying, yeah, this is fantastic. You can see there was a green candle, and before that, red candle came in with a bit of a bearish indicator. And of course, the market just simply went down from there. So that was a point where one could say, is this market going to go above? And if so, should I be being bullish but still have a nice stop? And that would have taken people out. But of course, going the opposite way, I mean, it's typical, isn't it, that the market goes up by the stairs and down by the elevator, and that monthly chart certainly demonstrated that. And you can see that also there's a line that goes from the bottom of 2009 up, which is taking into account those lows. You can see now that we've just popped our head above that. So again, there's this inflection point. I'll just go to the next chart. This is the weekly, and this just gives you a bit of a better idea of just where we are. So we're virtually in the middle. I think I've got I've got it later on. I think one with a Fibonacci retracement. So I think from memory, we're at about 50% of the range from February to March. So where are we going? There is this inflection point. It could go either way, and so a nimble trader can have the strategy. I mean, to me, the best way I like to trade without a bias is to say the market will tell me what's going to happen. I don't have to predict the market. So I really want to have a strategy that I can make money if the market goes up or down. I don't care.
Yeah, that makes sense. Being prepared for both scenarios. Now, a question: Are you, when you're going into, let's say you're going into long trades, are you using that previous tick up as support and resistance? So the previous since 2007, obviously you've had that up move. Are you using those as support and resistance lines? Yeah.
Yes, I do. Obviously, when it gets back down to, I don't know if you can see my pointer here.
I can. Yeah.
Oh, good. Yeah. So yeah, the market. So there's sort of, this is the mean in the middle. So when it comes back down here, this is in 2020. That would have been a good point, particularly when the close it tested below, and then it closed above, and then to me that would be an ideal time to go long, and Vicky Verka along up here. This could be a good point to go short. Now, people can say, but what about this candle, Darryl? What would have happened here? Well, it's not a problem. I mean, if I went short, and this is a monthly chart, and the market went up, that's fine with me, because if I've taken a loss, I'm not under therapy, but I say thank you, because what the market is saying to me is, Darryl, look, the market is not going this way, so you should be out of this market, and that's fine. I think one of the things that I've found over the years in teaching and mentoring, Hunter, is people cannot embrace losses. We hate losses with a passion. And that's logical. I mean, you'd be psychotic if you said, I love my losses. But I think that's really the key for a lot of traders, to be able to say, that's fine. And often I hear people say, I've got to learn from this. To me, there's nothing to learn. To me, it's not about more information or whatever. It just is. I mean, we don't have to analyze it. I think, I'm a technical analyst, but the market has just done what it's done. I don't have to analyze it. All the analysis should actually take place before you put the trades on and off. It's too late. This is just Darryl's way of looking at it. If I've got to make a decision and I'm in a trade, I think I'm in strife, because the result is either going to be right or wrong. And I'm not smart enough to know what's going to be right or wrong. I haven't got to that level yet.
Well, and it is, that's where the money management techniques come in. And that's where, earlier we were talking about putting odds in our favor. We were talking about limiting variables, et cetera. We're not going to win every time. And that was a very difficult lesson for me. And I'm sure it was a difficult lesson for everyone. Getting into this, you think, well, I have to win, 9 trades out of 10 to be successful. But I mean, if you're winning 9 out of 10, good job. But most of the time you're going to win, maybe half the time, maybe 40% of the time. But that percentage that you're winning, that 40-50% that you're of trades that are you're ahead much more than what you're losing every time you lose, right? So you may gain, those 5 trades, you may lose $20 each, but you're going to gain 300 on the 3 or 4 that you win, and then that's your profit. But that's a hard mindset. That's difficult.
And this is it to me, Hunter. Trading is counterintuitive. I find people who are very, very successful in life come to trading and they're not successful, and it is so frustrating for people. And I just think, very simplistically, we crave certainty, and we have a degree of certainty in our life. We've got a degree of control, but with the markets, we've got zero control. Except risk. And you touched on something that I think is critical for traders, and that is the risk-reward ratio. So ideally, it should be 1 to 3. It's exactly what you just said. So if you have what we call a losing trade, they're much less than the so-called winning trades. And of course, a lot of people think that they've got to have more winning trades than losing trades, but that's not the case. It's really, risk is everything. And it's not sexy, is it? I mean, most emails I get is all about the reward, how much money I can make. And it's not sexy to say, well, look, we've got this program and it's all about risk. People say, oh, no, I don't want that one. I want the one where I can make the money, please.
Right. Today, do you want to learn how to lose 7 trades out of 10?
Oh, can I'll have to. I think I'll patent that. Can I? I'll give you a commission on everything I sell for that.
Right. I think, okay. That's fine. We'll roll that. That'll be our new program. So what's our? So I brought you back one chart, but let's move forward to your. So you had ASX 200 on the weekly, I believe, was your next chart.
Yeah, that's the weekly. Yep.
Okay.
And so it's really just to show where we are on a week. It's easier to see on a weekly chart just where we are.
Okay.
I don't know if you want me to just comment on this chart. It's not a Metastock chart, but
no, it's fine. Show us what you're looking at.
Yeah, can you see this is the ASX 200 versus the US and the Asian indexes, and you can see that the S&P 500 has gone ahead in leaps and bounds. But the Shanghai Composite was interesting. It was above the S&P 500, but you can see that it's dipped down. Our ASX 200, we were the laggard, but we finally got above the Chinese Hang Seng. So it's interesting just to compare where we are. We've sort of come up a little bit in the world. I think probably because we haven't fallen as much, perhaps. But you can see that the indexes are typically pointing down, and I think that's important to note. That puts it all into context and probably emphasises, we're a little fish, really. Are you happy if we talk about the Reserve Bank?
Yeah, perfect.
Yeah, well, what's interesting with this is that you can see what's happened over the years. All of a sudden now there's a $3 trillion debt, and it's going to go higher. I'm not saying that's bad, but it is incredible what's happening now. I'm a person who believes that the governments around the Western world are doing the right thing. They learned from the Great Depression, but there's an incredible amount of debt now. That will have to be paid at some stage. We don't have to worry today, but I don't think we can just ignore it. I don't think inflation's going to take care of it, but that's okay. I think it's an important thing. This was something to show that there's only about 37% of your stocks on the New York Stock Exchange that are above the 200 moving average. So I think that puts it all into context. Whilst we can see indexes going up, when you drill down into the actual shares themselves, the stocks, there's only 37% above that 200 moving average. This is looking at the index relative performance of the Russell, the S&P 500 and the NASDAQ. And of course, the NASDAQ, if people are bullish, people want stocks going up, well, the place to look at is the NASDAQ, isn't it?
Right.
It's and you can see that of the 3 indexes, it's only the NASDAQ that is heading up. The others are heading down. I'm an option trader, so it's interesting. There's this bubble now with call options. People have gone, bonkers bananas now to buy call options. And it's interesting to look at the put-call ratio because it's gone from one extreme of the puts to this other extreme of the calls. So we're really in this. You can see what's happened historically. It's been in the middle, so to speak, but we've gone to 2 extremes with options. And with the VIX, we're still in an elevated risk. Basically, with the VISC, we're certainly not in the high risk, but we're not in the low risk either. So, but that's good. That's good.
Right.
Volatility can be very good with, particularly with options. This is a chart that I've got with gold. I know many people are looking at gold as a hedge, and again, if the market is is confirming your view and your trading plan, that's fine. I'm neutral. I don't sort of say whether the gold's going to go back to that high of 1925 or not at level. But you can see they were the highs of 1925 level at 1050. This is the US dollar index, and you can see that it's just really basically going sideways at the moment. If I can just stop here, Hunter, from a trading point of view, people typically will say that you can only make money if the market is going up or going down. But what can you make money if the market is going sideways? And I love trading what's called iron condor options, where you make the most money if the market is consolidating. So I just add that in because, so for some people, I know many traders are only making money if the market goes up, but that's only a percentage of the time. Certainly, the market is going up, grinding up typically, and then, you're going down by the elevator, but then there are times when it's consolidating. And that's where with some trading plans, you can be whipsawed in and out because of of just consolidating.
Mm-hmm.
This is our Australian dollar. I know at one stage when you were speaking with Gary Burton back in October, excuse me, he was saying then, and he's a very good trader, Gary, and excellent. And he was looking at the market then going back up to 70 cents, and he was quite right. So at one stage, you can see back in 2011, they were the halcyon days for Australians because we could get we could get $1.10 for our $1. Now we can only get 70 cents of US dollars. So it's more expensive for Aussies to come over to the US than before. The reason I just wanted to show this because this was just some interesting news, I thought. Whoops, I've lost it. There we go. Now, a lot of news comes out about retail sales, and they're saying that it was the biggest in record. The headline is that retail sales were soaring by 18%, but they're still below the pre-pandemic levels in May. And so, so even before that, the retail sales were down, but stock markets are jumping on the news, and just this last comment I thought was very interesting, and that is that, just get it back again, that the Bank of America Merrill Lynch has surveyed 212 mainly US fund managers with $867 billion under management. And the survey showed that 53% of managers believe this is a bear market rally, with 37% describing it as a new bull market. Now, I'm not saying the fund managers know any more than anyone else. I believe they don't. But it is interesting, the sentiment there, that they don't believe this is a V recovery, that this is a bear market rally. US jobs.
That is very interesting. I mean, they
yes.
Chances are they make good, more money than us, and they're probably relatively good at trading. If you're trading, if you're managing $867 billion, I don't even know how many zeros that is, but I know that you have to be good at your job to trade it. But that is interesting, and that would explain a lot of the stalls that we've continuously had throughout this. You were talking about U.S. jobs, unemployment. Let's get to that beautiful number.
Yes. And with jobs, there was a bit of an interesting point that came out, and the market moved up. And I think the next slide might show this, that if you look at the bottom of the screen, it says month-on-month change in US jobs, and it jumped up. And so the administration said, "Oh, look, yeah, we're back," but that's a misleading. It's a correct figure, but it's misleading. You've got to look at the context. The total change in US jobs is very, very high. And it's the same here in Australia. We don't know what we don't know going forward. But you can see there's just only a little tick up. So the majority, there's a lot of people out of work now. You've got to go back to the Great Depression to have these periods. Now, certainly with all of the stimulus, I believe that we will come out of this. But there is the elephant, if I can call it, in the room. And it's something that Jerome Powell has indicated. And perhaps if we can go down to the bottom of this, he says that if the virus remains, and these are the important words, reasonably well under control, he expected the economy to move through 3 phases. And just going to the last sentence, he warned that the 3rd phase of recovery will require, and these are the important words, and it's for Australians as well, for Americans to regain their confidence engaging in activity that does require close indoor contact and large outdoor gatherings. So what I'm gathering from that is that this is not a sort of a metric that you can measure. This is about how does an individual, how does Darryl feel, how does Hunter feel, how do we individually feel about going back to the life as it was before? And of course, how do you measure that? So, that's where there can be a huge amount of uncertainty. But I thought your Fed chairman really, really nailed it in my mind.
Yeah, and that's that's if you can, I think you will be able to measure it, but you'll be able to measure it over 5-10 years out. There's nothing that we can measure in the short term that is going to say, okay, well, Nancy and Susan down the street are okay actually going back into the restaurant versus having food delivered to their home, which maybe people order less, or the bars and nightclubs here, not in Utah, but the bars and nightclubs nationwide. I have friends that are in Florida, and they pair these nice restaurants with the clubs and the nightclubs, et cetera. And it's just been, if you limit those, it hinders everything down the line. So that confidence in engaging in activity that require close door contact, that's difficult, because this has lasted and will continue lasting a long enough period of time that Hunter and Darryl have changed the way that we operate as a habit on day to day. Looking forward, that's going to be difficult to say. Is it that if people are uncomfortable enough to change out of the new habit that they've established under these types of times? And that's an interesting one. If you call that one, then you're doing well.
Better than I've ever done. But it really is this balancing act. And I'm not wise enough to know where the balance should be, or the bias. But on the one hand, you've got the health issue. So we've got health experts who are saying this is what you should do to keep healthy. On the other hand, we've got the economy. And so obviously people do want the economy to come back. And so where do you put that balance? So in Australia, what we erred on the side of health, and we had very, very few cases, but we don't live in as a congested city. We're more on quarter-acre blocks of land.
Right.
So we've been fortunate in that way. However, we've got people who are unemployed, who may never get back into employment. We've got businesses that may never get back. So that's a tricky one, isn't it? And I think human nature being what it is, we're optimistic. and you just say, look, I didn't get COVID-19. I don't know anyone who has. I see on the news that a few people have, but I'm going to be okay. And some people have said, oh, look, it's just like the flu. And of course, with some people, they don't even get symptoms. Yeah. How bizarre. So this is something so new, Hunter. So I do feel for any administration as to where you put the balance. Just Darryl's personal view is, I could always get money back, but I can't necessarily get my health back. But that's an individual thing.
Of course.
So and like here, we want to get our people flying again. We've still got one state where you can't fly into, Queensland. I've got a house up there with family. I can't visit them until next month. So these are very, very interesting times, I guess. That's the phrase. But I like what Jerome Powell, I respect him very, very much. And I think that sums it up. That sentence.
I think it really does. Side note, Jeff Gibby is on the broadcast today on YouTube. He says hello. And
hi, Jeff. Yeah, I did a session with Jeff, and that was great. I enjoyed it. And I enjoy his presentations. Excellent.
Do a little shout out there. All right. Also, in YouTube, if you guys are in the comment section, just leave us a comment. If you have questions, if you have symbols you want us to take a look at. We have so I'm gonna tell you a short story here. Our marketing guy here, Greg, has been on the Royal Caribbean cruise line, I guess you could say boat, for a long time now. He is in a position on RCL, and every single week he asks, how do we feel about RCL? And normally I just ignore him, but I feel like one of these weeks I'm going to have to get to it.
Well, I think it's a great stock to trade on the short side.
on the short side, Greg. Gotta be on the short side. All right. So again, if you have symbols you'd like us to look at, just go ahead and throw them in the chat, and then I'll throw them to the professional here, Darryl, to do some analysis.
Too kind.
Did you have any charts you wanted to look at, Darryl?
I'll just go back to that presentation if I could. Let's have a look. No, I think I've covered the main ones. But I'm happy if people want me to look at anything. It's fine. That was that S&P 500. I like looking at the S&P probably more so than the Dow, but you can see this is the weekly chart, and you can see that 50% and 61.8% levels. Very, very interesting to go by.
Let's give in to Greg. Let's take a look at RCL. I think it's just.
Are you going to show it, Hunter?
Either way, whatever's easier for you.
Let me give it a go. Let me see. Sure. RCL. This is probably my slow way of getting there.
I can't remember if it's RCL.O or just RCL, but it's Royal Caribbean.
I'll just see if I've got it locally. No. Let's have a look at public.
Hunter, it's just RCL, not RCL.O.
Just RCL. Okay. Thanks, Greg.
Hi, Greg. I think I might quickly.
Hi, Darryl. Excuse me.
Sure. Let me get there. Give me just a second.
Just while you're doing that, I've been on the Royal Caribbean line, and very nice. And in fact, I was going to take my brother, who's just turned 80, on a Royal Caribbean cruise to New Zealand in November. The question is, will we have ships down here for November?
I think there's still people on ships from the last time they went there.
They've had an extended cruise.
Yeah, they're trying to figure out how to get people off of ships still, I think. So
we had a real serious problem with not Royal Caribbean, but with Carnival, a ship called the Ruby Princess, and we had a lot of COVID-19 infections from that ship. Our health people allowed people off the ship. This is in March, without testing them, and they went into the community. Yeah. So that in fact, there's a commission investigation into that. We've got a lot of. The reason why I say to go short, Greg, is that from Australians' point of view, we love cruising. I love cruising, but we've had a lot, and you may have over there had a lot of these investigative news people who have really hammered cruises to the extent that you'd say you'd never go on a cruise again. But anyway, here we go. So, isn't that beautiful? Doesn't it? It's like the Mona Lisa, isn't it? I won't be able to sleep tonight. This is just too exciting. Thank you, Greg. Can you put a Fibonacci retracement on that? I'm just interested to see.
Thank you, Darryl, for your
where we are.
Thank you.
It hasn't recovered as much as some of the other stocks. Let's just see where it is. Yes, it didn't get up to the 50%. So it's certainly, yeah. I mean, to me, I wouldn't be bullish, but I'm not giving financial advice here. It could zoom up tomorrow. Yeah, who knows? Because there is that pent up demand. I mean, people will. Yeah, I was going to say would die to go on a ship. That's an unfortunate phrase. That people really do want to go on a cruise. So yeah, this could recover quite quickly once we get past this. And I'm not an expert on the identification of the candlesticks. I see it's called a bearish engulfing. But to me, first of all, it's below the 50%. It got up to the 38.2%, but it couldn't go above that. So, yet, and of course, it's below the 200. It's just a little bit. It's getting below that. Is that the 9? I've forgotten, Hunter, what that.
Yeah, so 8-period exponential.
So it's really. So between that and what's the blue one again?
Blue one is a 50, I believe. 50.
50, yeah. So yeah, it's interesting. Looking at it, what can we say? First of all, from a trading point of view, you see the gap. You often can trade filling of the gap. So once the market did get up almost to 50% there at one stage, one could say, and can I just take the cursor away a bit? Is there a long wick? No, there isn't. It's I don't know what do you call that? Oh, it was a doji. So one could say, look, yeah, that was an indication that the trend probability could change. But certainly on the next day, there's another really a doji. But certainly, yeah, the very next bar, the third one down from the top, it's showing really that the tendency is for it to go down. But within those bars, in one way, it's going sideways. I was talking about iron condors with options. Yeah, you could trade that in that way, but that's using options, I know. But at the moment, it's looking bearish, obviously.
Yeah, and this is, these 3 bars, these 4 bars right here, this really shows kind of a bearish takeover, because if you look at, bulls versus bears, someone's going to have more influence over the market. Someone's going to win here.
Sure.
And, we had this bullish surge right here, did really, really well. We had this big surge, retraced back a little bit on the same day. And then this doji at top, this is a smooth bearish takeover. And then we've been flat, and typically what a bearish engulfing means is it's a bearish signal that we it tried to continue the uptrend, but it really fell out. I mean, this is something that I think that you made a good point of putting a marker somewhere right around here, $75. And, you know, if we start moving above that, yeah, maybe it's a little bit longer term. But so Greg says, so what I hear is full speed ahead on RCL. There are a lot of ship and cruise jokes going on in the YouTube comments right now. Jeff says, is it going to be able to sail through the storm? Not if no one's on it.
Was
right.
the Titanic part of the RCL line? Yeah, well, it's full speed ahead. I wasn't clear on that.
Right. Let's do one. If people want to type in a couple of symbols, we'll take a look. Let's look at one. We were looking at a couple of weeks ago. Let's see here. Let's go into my list. And let's do whole logic. Let's take a look at this one. Let's get this indicator off here.
What do they do? What does whole logic?
I'm not sure. I don't remember.
Is it in the NASDAQ?
It is. Let's see here. Yes, it's in the NASDAQ. I don't remember exactly what they do.
No, that's okay, Hunter, because yeah, it's gone back up to the previous. I mean, that's done extremely well, hasn't it? I mean, I think that's what everybody would like all charts to look like, this V recovery. So that perhaps people will take a screenshot of that and put it on the wall to say this is perhaps where we're going to go with all of
nice.
them.
You know, it did make this strong move, but you know, the reason I bring this up is this is a strong case to really watch your levels, because it hovered along here before before the crash. It took the elevator. As a side note, that saying, I had never heard that before, taking the stairs up and the elevator down. Thank you for that, by the way.
You're welcome.
Really, it took the elevator, and the elevator lost all brakes and all cables and fell out here. But it has recovered, and we are waiting for this bar right here.
Well, that's a bullish, isn't it? I mean, that is a bullish. You'd have, but it is a gap up again. You know, whether it's wants to fill the gap or not, we don't know. But that level of support and resistance is very, very strong, as you've shown. It goes right back to pre-COVID days. So you would say that there is some substance to it, some non-technical reasoning for it being at that level. But again, this is another where we've got it consolidating around that area. I know I don't get commission for anyone who puts an iron condor on your stock exchange, but that would be a great iron condor trade where you make the most money if the price stays within the upper and lower parts of that sideways movement.
Now, I have a question for you, an options question, while people are putting in symbols. Again, guys in YouTube, this is take the opportunity, throw a few symbols or a few companies into the YouTube chat, and we're happy to look at them. Darryl, when we're looking at options here, if we're not doing this sideways trading, the iron condor trading, what typically how far out are the contracts that you're looking at?
1 month. The reason for that is, well, again, it depends on your strategy. I guess I've been a seller of options, and so the edge. I believe I've always got to have an edge as a trader. So, what is the edge in selling options? The edge is simply that time is always decaying. Vice versa, for a buyer of options, the lack of an edge is the fact that you're giving up time premium. So there's two parts to the premium. One is to do with time, and so with going long to buy options, it's sort of like going into the wind. You've got this countermounting force. So I typically, so what I've been doing recently, because I have been a bit of a bear for fundamental reasons, I was selling call options against my stock in my retirement fund. So rather than selling the stock in my retirement fund, because down here in Australia, we get quite good dividends and with what's called a franking credit. So in the end, you can get about 8% return, which is quite a good return, a bit more than term deposits. So I've been selling call options against my stock. So you could almost say it's a bit of a hedge. But in doing the buying of an option, yes, there are advantages in that the maximum you can lose is the premium. That's the first thing. However, not only does the price have to go up, there has to be a degree of velocity for it to go up, for the option premium to go up, because there's something called delta. Now, that's part of the Greeks, and I don't speak Greek. No offense to the Greeks, but I barely speak English. But I'm not really great on theta and beta and all the rest of them. But I do know that delta is important because the option premium does not move exactly as the price movement of the underlying. So there's a lot of factors in there. But sure, if you've got, let's look at this particular chart with this stock, Hology. If you were bullish, excuse me, and certainly at the bottom there, when it went past that 8-day exponential moving average, if that was your trigger, and look, even when it went above it, see how it went above it. If I went long there and I was stopped out when it went below, that's fine. That's okay. That's cool. But then it went above it again, and hey, by buying a call option, you've got leverage, of course, over and above buying the actual stock. But that's the only. So I guess if I was going to buy an option, I wouldn't do it for 1 month. I might have it 3 months out. But there is that time premium that you're paying for in that. So there's the price premium and the time premium. So that's why I've been more of a seller of options. But I would never be a naked seller of options at all, because that's too risky.
Mm-hmm. Okay. Let's see here. People are shy in YouTube today. They don't want to put in the sentence. Well, I guess it's not a bad thing. We've been on for about an hour.
That's it. So you know why? Because I knew that there was an Australian coming along, and I didn't know whether you needed an interpreter. So we almost speak the same language. It's good, Just have to read my lips.
Yeah, no, it's true. You threw me off with the what was it, Vika Verka earlier. That one got me.
It's a bit like fair dinkum. How do you translate fair dinkum?
I have no idea.
It's like rigidly ditch. How do you translate it? To put it in the vernacular, it's okay. So,
okay.
or something which is true. So, yeah.
Well,
but don't forget, when you look at the globe, and I know we're up to an hour, and I'll stop, but you've got to feel sorry for us, Hunter, because when you look at the globe, we're down under, right? So what we're upside down, spinning around at 11,000 kilometers an hour or something like that. So no wonder we talk funny.
Hey, but Sydney's a beautiful place. I've been to Melbourne and Sydney, and everybody's very, very nice. I'm originally from Texas, and the similarities between Australians and Texans that's not a bad thing. It's a good thing.
I agree. I love coming to America, and I was there with my brother just only a couple of years ago. Well, it must have been 3, and loved it. Went to a lot of areas, so I've been over there quite a bit. They still let me in.
That's good news. That's well, not right now, but I mean that's good news for future reference. All right, Darryl. So thank you so much for coming on today. Before we leave you, though, I want you to tell the people how to get a hold of you if they have questions, if they want to learn a little bit more about your methodology, if they want to learn how to trade our condors, we'd love to put here in the chat how to get a hold of you.
Oh, great. Okay. So I've got a website called methodandmadness.org. So it's all just one word, methodandmadness.org. And they can get hold of me by emailing me at Darryl, and it's DARRYL at methodandmadness.org. And no, thank you. I'll be more than happy to pass on whatever I know.
Yeah, sounds great. There's a lot of value in that strategy, especially any options traders out there in YouTube land that are watching this right now. I highly encourage you, pick Darryl's brain a little bit. We'll have you on again. I appreciate it. I think it was a wonderful session. Thank you so much for your time and getting up at 2 a.m. and putting on a suit and tie for us even. Look at that.
I don't even go to bed like this, so I'll just assure you.
Wonderful. Well, thanks so much for your time, Darryl.
Thank you, Hunter, and thank you, everybody who's on this call. Appreciate it.
Thank you, Darryl.
Bye, Jeff and Greg.
They say wonderful job. They say wonderful job. All of you out in the audience, thank you so much for stopping by. We'll be here same time, same station next week. Stay safe out there. Wear masks. Be good to each other. And as always, happy trading.
Bye for now. Take care.